Do you know what is equipment financing? Please subscribe to our channel and hit the bell icon to be the first one to receive the notification of our latest videos. Hello and welcome to Bankrate, where millions of people around the world can learn and be aware of banking and finance. So let's get started. About equipment financing. Gear financing is the utilization of an advance or rent to buy or get hard resources for your business. This kind of financing may be utilized to buy or get any physical resource, for example, a cafe broiler or an organization vehicle. There is a gigantic number of minor departure from hardware financing that oblige explicit kinds of organizations and gear. The most significant thing to comprehend about gear financing extensively is that it's for financing a physical resource. For what reason does this make a difference? Dissimilar to with, say, a working capital advance, the advantage you're buying fills in as a sort of insurance. On the off chance that you default on your credit or rent, the money lender can repossess the benefit. Along these lines, gear financing will in general be a more savvy and lower hazard approach to get hardware than different types of financing. Who qualifies for equipment financing? Any business that uses physical hardware can likely utilize gear financing. That incorporates such things as vehicles, PCs, and apparatus used by your business. Meeting all requirements for gear financing is another issue. Gear credits will in general be a moderately traditionalist sort of money-related item. Much of the time, you'll have to have great credit, 600 plus, and you ought to have the option to show the capacity to support your hardware advance or rent. You'll likewise need to choose the correct hardware financer. In other words, you'll have to pick one that funds your kind of gears. Why use equipment financing? Entrepreneurs normally get gear financing in these circumstances. You need costly hardware yet can't bear to, or don't have any desire to, buy that gear forthright. You have to supplant your hardware as often as possible since it has a short life expectancy, or you generally need the most recent innovation. You need a blend of the above mentioned. Hardware loaning versus leasing. There are two regular approaches to fund gear, through an advance or a rent. While both accomplish similar finishes, giving you admittance to the gear expected to maintain your business, there are a lot of contrasts between the two strategies. Here's a once-over on each. A. Gear loans. 1. A gear credit is an advance taken out with the express reason for buying hardware. Ordinarily, the hardware makes sure about the credit. In the event that you can no longer bear to pay the advance, the gear gets gathered as security. 2. These credits are valuable for entrepreneurs that need a bit of hardware long haul however can't bear to make the buy inside and out. A loaning foundation may consent to broaden most of the capital with a goal that you can pay in occasional additions. 3. There are a couple of drawbacks to this course of action. Most loaning foundations will just consent to pay 80% to 90% of the cost, leaving you to cover the other 10% to 20%. 4. The other drawback is that, in the long haul, the course of action will eventually cost more than if you had quite recently purchased the hardware inside and out. The expense of obtaining changes relying on the sum acquired, loan cost, and term length. Consequently, it's fundamental to crunch the numbers before tolerating a gear advance. Gear advance financing costs can change uncontrollably relying upon your loan specialist. 8% to 30% is an amazingly unpleasant range for what you can expect. Your FICO score, the measure of time you've been doing business, and quite a few other obscure recipes a particular bank chooses to apply to your case. By and large, gear credit loan fees are fixed instead of variable. B. Hardware lease. 1. Renting hardware is a well-known choice in the event that you have to exchange out gear every now and again or don't have the funding to pay the initial installment required for an advance. It's likewise bound to take care of extra delicate expenses related with transportation and introducing the gear. 2. Rather than acquiring cash to buy the hardware, you're paying a charge to get the gear. The lessor, the renting organization, actually keeps up responsibility for gear yet lets you use it. 3. Rent game plans can change contingent on your organization's needs. Most regularly, dealers go into a rent understanding in the event that they intermittently need to change out their hardware for a refreshed variant. 4. In the event that you need to claim the gear, a few lessors offer the choice of buying the hardware toward the finish of the term. 5. Renting for the most part conveys lower regularly scheduled installments than in advance, however may end up being more costly over the long haul. To some extent, leases will in general be more costly on the grounds that they convey a bigger loan cost than in advance. There are two significant kinds of leases, capital and working. The previous capacity is somewhat like a credit elective and is utilized to fund the hardware you need to claim long haul. The last is more like a tenant contract and, as a rule, you'll return the gear to the lessor toward the finish of the rent. A rent will in general be more costly practically speaking. However, their normally fixed loan costs fall inside a comparable range to hardware credits. Contingent upon the game plan, you may have the option to discount the whole of the expense of the rent on your assessments, and leases don't appear on your records similar path as advances. How rents influence your charges is too confounded to even think about covering inside the extent of this article, yet obviously the sort of rent you select will figure out what you can discount and how. Conclusion: all in all, renting is best for hardware that normally needs redesigning, and a credit is best for gear that will keep going quite a while holding its convenience. Keep in mind, you're not restricted to conventional term advances either. Credit extensions and receipt calculating are other basic approaches to fund vital hardware in the event that you can't bear to pay using cash on hand. Notwithstanding what direction you decide to back your hardware, figure it out and read over the agreement to guarantee the terms work for your business. Thanks for watching. We hope you learned something valuable today. Don't forget to like, share, and subscribe. Also, hit the bell icon to be the first one to get the notification of all the upcoming videos.